Hello everyone and welcome to this week's FX update. My name's Craig Erlam, Senior Market Analyst at OANDA. Now I hope you all had a fantastic weekend. You've come back refreshed and ready to go. Fortunately it has been a slightly slower start to the week. As you can see here from the economic calendar, there hasn't been too much to see or hear about on Monday. I guess really what we are hearing a lot of today in the news has been lingering on from previous weeks or over the weekend. The two stories that you can see on the economic calendar here from the weekend, for example, are a referendum and an election. Two things which we've become so accustomed to over the last few years. It's been obviously quite a busy period. The Japanese elections first went broadly in line with expectations. It seems that Shinzo Abe's Liberal Democratic Party, the coalition that they've formed, achieved their supermajority in the lower house, which was at times in doubt. It was a bit of a risk that Abe took in calling these snap elections, because he wasn't due to call. To call them until later on next year, but he was trying to take advantage of disarray in the opposition parties and also the additional public support he'd gained from his position and his stance over North Korea. And I guess a couple of things we learned from this election result. One was that in achieving the supermajority, giving his coalition the supermajority in both the lower and the upper house, means he now has a platform with which to pursue Abenomics further, but also to pursue constitutional reform on its pacifist agenda. Now, it's mainly the former which we're really concerned with first and foremost, and what's generated the reaction in the markets that we saw overnight, and that was that we saw the yen weakening and the Nikkei gain more than 1% to see the highest level since 1996. The reason for this is because Abenomics is synonymous with a weaker yen, because it includes large-scale monetary stimulus, which stimulates an export-driven Nikkei 225. Really, it's going to be more of the same. I think it was just noteworthy that despite Shinzo Abe's opinion poll ratings being very low, he still managed to secure, along with his coalition parties, that super majority. And again, that is just purely based on the timing. He took a risk similar to what Theresa May did in the UK, but clearly he followed this through much better. The opposition was in far more disarray, and the environment was more friendly to him, and so now it looks as though he's going to become Japan's longest ever serving Prime Minister. So I expect this now just to be a case of more of the same from Japan, which is why the result didn't spur too much of a movement in the markets, but it did spur a relatively expected one. The Lombardy and Veneto referendums, it's just a note point really, because while people have associated referendums with disruption, this is very different. This is a referendum for more autonomy, first and foremost. So this is very different to Catalonia or Brexit or the Scottish referendum. It's also a referendum that was approved but to take place by Rome and is non-binding. And that's very important, especially when we're looking at the situation in Catalonia right now. The next steps, I guess, will be discussed in Rome and the regions over the coming weeks and months. But the fact that in both cases they voted for more autonomy is just another example, really, of something that we're seeing quite a lot in Europe in particular, but we are seeing elsewhere, which is regions within countries or regions within the euro area looking to have more control over things like budgets and spending and tax collection, etc. And it's not a surprise when you consider that we're now a decade since the global financial crisis, and you look at countries like Italy, still very high unemployment, etc. So it's not surprised to see these votes taking place, but this is far more orderly than the one which took place on October 1st in Catalonia. And in terms of that, the latest on that, we are going to see the Catalan Parliament convene a session on Thursday. This is to discuss a response to the decision that was taken over the weekend by the Spanish government to implement Article 155. Now that's got to have final seal in Madrid on Friday, which makes the timing of this on Thursday not entirely coincidental. It seems that Mariano Rajoy has given his backing to Article 155 being triggered. What this means is Catalonia will lose its regional powers effectively, its autonomy, and temporarily Madrid will take control of the region. People like the Catalan leader, among others, will be sacked for their part in this independence push, and Madrid aims to hold fresh regional elections within the next 6 months. Now, Catalan is looking for its own response, and one option could be that after this meeting on Thursday, after this session, there will be a vote, and they could vote to implement its push for independence, and that could create much larger scale disruptions from there on in. There's talk that the Catalan leader could receive up to 30 years in prison should the independence be declared, and I'm sure there'd be far more arrests, there'd be far more unrest in the region as well. There's already calls from the left-wing party behind the independence push for large-scale disruptions in Catalonia, non-violent, of course, but still large-scale disruptions. This is not the last we've heard of this. I'm sure this is going to be an ongoing story throughout the week, but clearly things there are becoming more disruptive rather than less. We have seen the IBEX trading off and much below its peers once again today, another sign that people are becoming a little bit more concerned about events in the region. We've also seen the euro trading off today. Now, people have attributed this to the latest developments in Catalonia. I'm not convinced. The simple reason being, the euro has been completely immune to events so far. So why today it would choose to respond the week of the ECB seems far too much of a coincidence for me. I think there's an eye on the ECB meeting on Thursday very much in play here, which we will jump to next because it is the week's key event. On Thursday, the ECB will meet and it will make its latest monetary policy announcement. The announcement expected to be the next phase of the unwinding of quantitative easing. Currently, this stands at 60 billion euros a month. It's due to expire at the end of the year. Now, they are, of course, going to extend it. The question is, how will they extend it and how will they continue the tapering process? Now, there was speculation that they could, for example, cut it in half to 30 billion euros until September next year, and then they will make another announcement thereafter, or they may even announce that it will then be reduced to zero. They could announce a more staggered approach, dropping it to 40 billion and 20 billion, but maybe 40 billion for 6 months, 20 billion for another 6 months after that, and then down to zero. The inkling I have is that they will probably, whichever decision they make, they will not commit to anything thereafter. So if they do reduce to 30 billion or they do reduce to 20 billion until September and or June respectively, I don't think they will commit to anything thereafter. I think they're going to adopt a more cautious approach, which does bring into question the strength of the euro and one of the reasons why the euro may be becoming under a little bit of pressure. I think this is almost entirely priced in, I believe, and I am curious as to what the ECB could possibly announce that would trigger more euro upside. I think the only thing that would be a very explicit end game, and even then, I am curious as to how much higher the euro could go, and I think this is probably more the reason why we are seeing that little bit of euro weakness today. Aside from that, for the rest of the week, it is looking relatively quiet in terms of tier 1 data. It is worth noting that US corporate earnings season gets into full flow this week. 185 S&P 500 companies due to report on the third quarter. That's important whether you trade these individual stocks or not. It's likely to influence sentiment. It's likely to influence whether we're going to see a continuation of the rally in equity indices, or whether we're going to see that stall or maybe partially correct, and that could influence overall sentiment as well, which does impact things like gold and other commodities. It can also impact currencies as well, so that's something worth keeping an eye on. Around that, we have got scatterings of economic data. We've got things like the services and composite PMIs and manufacturing PMI preliminary readings on Tuesday, things like IFO and Aussie CPI, new home sales, GDP preliminary reading for the UK on Wednesday and the US on Friday, alongside core personal consumption expenditures. This isn't the inflation reading, this is more of a spending piece of data. And then we've got things like the RBA Assistant Governor DeBell. The other thing I would note, and the final thing I would note for this week, is that you can see here Neil Kashkari is speaking on Thursday. Do not expect anything from a monetary policy perspective. We are now in the blackout period. The next Fed announcement will come a week on Wednesday, and the Fed goes into its blackout period 2 Saturdays before any FOMC announcement. That means you will not hear any monetary policy makers speak about monetary policy. So even though we can see this here on Thursday, in keeping with the blackout period, Kashkari should say nothing about the upcoming meeting or monetary policy in general. So that's all the key points which we've got here for the week. If you want to find out any more, then do just visit marketpulse.com and you can click on the economic calendar here. But you can also visit as well to find all our commentary that we post throughout the week. That's myself and the other analysts, Kenny, Dean, Alfonso, Steve and Jeff. We post all our commentary here throughout the week, and this is where you'll also find a copy of today's video should you wish to find it, depending on whether you've seen this currently on YouTube or whether you've seen it on Twitter, etc. Now we'll move on to the charts, and I think you're going to find a common theme with what I've got to say today, because there's many charts where there's very little actually changed. We have been through a couple of weeks period where the volatility has been a little bit off. This does happen in the markets. I think as well the fact that we're approaching such an important ECB and Fed meeting is probably playing its part as well. The situation between the US and North Korea seems to have quietened, albeit it's still bubbling way under the surface. And I think a number of these factors all occurring at the same time is feeding into it. But again, with corporate earnings season now underway and sentiment so bullish, I wouldn't be surprised to see that continue. We're also awaiting the announcement from Donald Trump regarding the next Fed chair, and that's going to have a big impact on the dollar, and it's the main reason why we have seen the dollar staging a recovery over the last week or so. Talks of hawkish policymakers taking over as Fed governor, or even playing prominent roles. People like Jerome Powell and Mr. Taylor, John Taylor, I think his name is, who created the Taylor Rule, and with the Taylor Rule, which suggests interest rates should actually be much higher than they currently are. So that is one of the reasons why we've seen the dollar resurgence, and in my view, as I've said in previous videos, it's my view that I think we could continue to see the dollar strengthen towards the end of the year, and I still stand by that right now, even though we are in a bit of a sideways trend right now, consolidating phase. Now we did rally back up to this 50 fib here in euro dollar. There was possibility we could have gone up to the 61.8. Again, I remain bearish on this just purely because we've broken the trend line. It was looking a little toppy before, and we haven't seen a completion of this head and shoulders pattern. So we had this little rally up here. I wasn't too concerned, and now it's come lower. It actually fell slightly short, and it's coming lower. A break below this previous low brings this back into view, and a break of that I think would suggest that we are going to see a move further back towards these kind of 115 levels. Maybe this is a case of traders waiting for Thursday before committing. That wouldn't surprise me. It's a big meeting, and Mario Draghi does always have the potential to rock the markets. Cable has been much of the same. Again, this is going to be a common theme throughout this video. We had the rally back into 133.50s. I wasn't particularly bullish throughout that rally. I do think cable is establishing a range at the minute. You can see that 130 is clearly the low. We came back as far as 130.85 and then caught a nice strong bid on Friday. And now we're back above 132. We'll see how it tests around these 133s to 133.50s again. But I don't have enormous bullish or bearish view on this right now. I think we swung too high to the upside, possibly swung too low to the downside, and I'm just waiting to see exactly where we establish ourselves, because I don't see any particular reason to be overly bullish the pound, even though the market wants to be, because we are still expecting this Bank of England rate hike this year. I still remain sceptical that it's A, warranted, or B, going to happen. Clearly markets are keeping this pair elevated on the expectation that it will. Should the Bank of England disappoint, then I think that 130 could give way relatively quickly, given that this is one of the few pairs that the dollar hasn't had as much joy against as some of the others. Euro sterling, as with euro dollar, we did rally up once again. As with cable, we did rally up once again towards these 90s. We struggled to hold above 90, and then we rotated lower once again. We're testing the lows. At the moment, I'm just seeing a range bound here between 90.25, just around 90, and 88.50. A break above or below here will give us our next indication. But again, I'm not holding a particularly bullish or bearish view in this case. If I was going to favour either, it would be slightly favouring the pound because of rate hike expectations and the fact that the Bank of England could go, and the fact that, as I said, on euro dollar, I think euro dollar is fully. I think this move on Thursday could be broadly priced in, but again, we could expect a lot of volatility on Thursday and a lot of noise, so be careful, be wary of that. But like I say, this, if you look longer term, we had the break of the trend line, we had the test of the 50 fib. The second test of the 50 fib always worries me, but should we break below these 88.50s, then at the very least I think we could be looking at a move back towards these kind of 87.50s, both because you've got this kind of double top formation, but also because the fact that we've rotated off to 50 usually is a bearish signal, and I think a move back to the lows would be perfectly reasonable. But again, once again, then you've got the test of these previous lows around the 88s, 87.50s, and the 200 and 233 day simple moving average. Aussie dollar, the price action was much the same as we saw in euro dollar. We came back a little bit above, actually, at 38.2. We stumbled a little bit and then we moved back up. I think there's a couple of points here. Firstly, is we have found resistance around that 38.2 again, which I find very interesting. We saw a very strong sell-off. We did that having broken through this 55.89 moving average combo. We broke up, we failed to break above them again, and then we've rotated low and we've made new lows. As far as I'm concerned, it's not the perfect fib move, but it certainly looks a little bit bearish right now. The fact that we've broken below the previous lows, and also Friday's very bearish candle, suggests to me that things are looking a bit bearish right now. The next key test is this 77.30s, which was the previous low, and a breakthrough here. And a break below this zone, really, of this 77 to 77.50 zone. Does draw attention to the 200 and 233 day simple moving averages, but really the next key zone of support is you were looking at around these kind of 75 through 75.50s. Just a note as to whether, I mean, the 200 and 233 day simple moving averages has been notable as support and resistance zone throughout this process, but I mean, in these choppy markets we have broken above and below, so I don't think we can get an overly bearish read on this. We could see some profit taking, for example, but I wouldn't be surprised to see that broken because it doesn't appear to be particularly sturdy at this moment. Dollar CAD has made new highs, so looking a little bit more bullish here. We were kind of range bound here between the 24.50s and the 25.75s for a few weeks. We broke above there on Friday, and now we're finding a little bit of resistance around these 26.50s, the previous high. But the fact that we've broken through this range, in my view, makes this a little bit more bullish. There could be a little retest to the downside, but I think things are looking a little bit more bullish here. The next test here is the kind of 127.75s, again the previous high. Ultimately, I really would like to see a move back into these 130s as I've seen on previous videos. I think that'd be a really nice test. You've got the falling around the 50 and 61.8 fib. You'd have the nice round number, psychological impact of the 130. And also the 200 and 233 day simple moving average. Still got a way to go yet, but I really wouldn't be surprised to see that tested, which again, as I've said previously, is quite in keeping with my belief that we could see a positive end to the year for the US dollar. Sterling CAD, we're as with others, we're kind of range bound right now. Since we broke above here back in the middle of September, so about 5-6 weeks ago now, we've had this resistance zone around these 167.50s. We've had support around the kind of 163.50s, and we've not seen any real break above or below there. So we're trading at the top end of the range. Should we see a break above the highs, and most notably through the 50 fib, then we'll be looking at this kind of 170 level as the next big test. Big psychological level, price resistance falling just short of the 61.8 fib. But I wouldn't be surprised to see that rotate back to the downside once more. We'll just wait and see how it tests these highs. Of course, this is a very bullish candle, which we should be very cautious of from Friday. That would suggest that there's some momentum with this upside move. So, I really wouldn't be surprised to see either happen. I'm not here to predict which will. Rotate. If we see a nice reversal setup, then it wouldn't surprise me for a rotate to one of these 163.50s, a break through the high, and I think the 50 fib comes a little too close to offer too much resistance. I'll keep an eye on the momentum indicators, but really I think 170 is the key one to the upside for me. It's a really interesting move we've seen in New Zealand dollar over the past few days. We saw rotation off the 38.2 fib, didn't quite reach the 50 fib. We saw rotation off the 38.2, and then we saw some strong selling, breaking below the previous low, continuing its move on Friday, and now we are stabilising just below 70. Took out 70 quite comfortably, considering notable psychological level. There is always the possibility for it to stumble there. It did on Thursday, but it didn't hold for very long. Taking a look at this head and shoulders pattern now, it's looking a lot more comfortable. 75.50 down to 72. So taking that possible price projection of around 350 brings back to 68.50. That suggests there might be a little bit more downside still to come here. Ultimately, this previous zone of support between 69 and 68 is the clear important level as far as I'm concerned. It's been such a big level for quite some time now that this is the one I'll be keeping a very close eye on, and of course the 68.50s falls right in between that. So 68 through 69 I think is going to be could possibly be a very notable support zone, and it would also mark the completion of this possible price projection from the head and shoulders, which broke initially back at the end of August. So we've actually seen quite a fast move to the downside given the size of that setup. Dollar yen has seen a nice move this morning on the back of those Japanese results. Again, the stronger dollar today is also helping aid this move higher. But once again, we're getting into the 114s, and it looks like we're seeing some profit taking now. We broke through the previous highs finally after numerous attempts. You can see 1, 2, 3, 4 attempts here. Each got sold into. We finally broke through there this morning. We had a brief hold above there on Friday as well. But again, we've run into these kind of 114s, and once again, we're running into resistance. I'll be very interested to see how this closes. If we close, for example, in the red, then that could be a bit of a correction signal. We're looking at the momentum indicators here, and there's possibly not really too much to read. There's a big gap lower prior to this latest rise, so there's not too much to read into here. Looking at the moving averages, they're not really supportive, to be quite honest. So again, add that to the if we see a nice bearish close, then this could be a sign of a correction. And while into the end of the year I'd still remain bullish dollar yen, I want to see a break above here before I become too bullish on this. All we've got evidence of over the course of the last 6 months is range-bound trades between 108 and 114, and there's always a reason why people tell you when we're getting above here that we need to be bullish, and down here we need to be bearish. But ultimately, you can look at the charts, and a range has been established, and it's not broken significantly through, this being the biggest test back when the North Korea-US situation was at its most hostile. Sterling yen next, and we are continuing to see this bit of a correction. I still get the feeling that there is a bit more downside to come, that this is just a bit of a consolidation phase. We're back at the top of the rising channel, which I've drawn on here though. not really breaking above it. If we break above it, then that would put my theory. I wouldn't do my theory any good. But if we should we retain back into this rising channel, then perhaps this is a sign that there is a bit more downside life in this yet. I'd like to see a test of this 50 fib just because of how nicely it holds up with the bottom of the channel of the Ichimoku cloud. That'd be a nice test because a breakthrough here would certainly appear at least to be a bit of a bearish signal. But of course, the movement today being largely driven, at least in the early stages, by the Japanese election result. Finally, Euro Yen. Interestingly, Euro, the only currency that I can say that didn't manage to hold on to gains against the yen. So we had that little bit of move earlier, but instantly turned into the red. Interestingly, again, holding around those rising trend lines. So you've had the break of the trend lines, and then you've had a rise, and you're seeing it tested from below. We have seen it test for 3 days now, but it hasn't broken above. I would say that we did break above the previous high, which puts the possibility of this being a falling triangle to bed. Instead, now this just again looks like consolidation. Really, the key test here is a break above the trend line and or a break above that previous high versus a break below the previous support and what has now become the nice base for the Ichimoku cloud. Until we get either of them, then this is just range bound and that can continue for as long as it likes. That's all we've got time for today. Please join us next week where we'll be doing a live webinar analysis, and that'll be taking place. You can find the details of that on the OANDA website in the education section. That'll take place 12:30 UK time. So please do join us for that, and you can ask any questions that you have. Aside from that, I hope you have a fantastic week. The best of luck with your trading, and I'll catch you again very soon. If you've got any questions, by the way, never hesitate. You can always follow me on Twitter and ask me questions. My Twitter handle is Craig_Forex. Thank you very much.